Oh, yikes, again, times two. Times two right now. Another company absolutely getting mashed in after hours trading after an earnings report. Intel here down 7.68%. That's some wild stuff, especially out of Intel. I mean, this is a stock that, if you look year to date, don't worry, it'll load, was only up 12% year to date, and in the last year only up 3.9%. So this thing was barely up at all in the last year, in which a lot of stocks have taken off, and yet it still is down 7%. And in the last 5 years, only up 61%, pretty low for the general market standard, really, and down an additional nearly 8% in after hours trading. Let's look at this earnings report and see what might be the dilemma. Quarter three non-GAAP EPS of $1.71 is a beat by 60 cents on a GAAP EPS line of $1.67 beats by 61. So profitability, a massive beat in terms of profitability, way over expectations. That's nice to see. Personally, I think that alone should help. I mean, reduce the nonsense of trading the stock down 5+%, but that's just me. Non-GAAP revenues coming in at $18.1 billion versus it was a miss by $170 million, up 4.6% year over year. I mean, what can I say? Definitely not fantastic in terms of a miss. I mean, you wouldn't want to see that. So I guess I see why the stock's down. There's got to be more to the story, though. Okay, there's always more to the story if it's down this significantly. They achieved an all-time record in Intel's Internet of Things group and record third quarter revenue in Data Center Group and Mobileye business. Okay, records. We love records. Client computing revenue came in at 9.66 compared to a 9.64 billion estimate. Data Center Group came in at 6.5 to 6.65, which is could be part of the reason there too. You'd like to see a hit on the data center aspect of it being such a core aspect of their business. That's really where the main miss is coming in. Really, where the main miss is coming in. So, not excited there. For the guidance, they are raising full year EPS and gross margin guidance. Now expecting 450 and non-GAAP 525 or 528 from prior guidance of 480 versus a consensus of 411. So massive improvement actually in terms of guidance. So very nice to see that. Revenue guidance expected at 18.3 compared to an 18.26 billion number. EPS coming at 90 cents versus a 94% consensus. So give and take there in terms of the Q4 guidance, but nothing that bad. And obviously, if they post a number like they did this quarter, I don't see what the issue there is with the EPS line. I don't know. We'll take a peek. Let's look at the press release, see if we can find out some finer goodness. How about that? Is that what people say nowadays? That's what I'm saying. CFO retiring May of 2022. Don't think that's the news. Let's just look at the statement, see if this is what's going on by Pat here. Pat's got a very distinct voice, and it sounds like this. Quarter three shown an even greater spotlight on the global demand for semiconductors where Intel has been uniquely breadth and scaled to lead. Curious on that, if that's true, but nothing crazy here. I mean, nothing crazy to say. Everything looks normal there. Look at here, a nice year-over-year comparison. We're up in every single aspect nearly. Slightly down in operating margin, nothing crazy. But net income line, $6.8 billion, is up 60% year-over-year. EPS up 64% year-over-year. I like it. I like it a lot. Similar stories with the non-GAAP numbers. Really nice. Really nice. So data center, obviously you see computing down 2% year over year. Not exciting. The data center though still up 10%. Nice to see. Internet of Things Group up 54%, and Mobileye up 39%, which could be a big portion of the business. That acquisition of Mobileye could be pretty big for them in the future when you talk about automated DEXs. Just potentially. We'll see. Let's see. I mean, nothing crazy. We saw the outlook. Look. Hopefully we get some information. That's the word. Information. Coming with this conference call. See what some of the issues might be. I mean, this stock, personally, I don't think it should be trading so far down based off what I can tell in the earnings report. Nothing that crazy. Again, we still see an issue in terms of semiconductors as far as shortages. Everything's a shortage, but semiconductors have been having an issue for a while, and I think that overall plaguing the industry definitely could impact it, but based off of their guidance, I just don't see the impact of that necessarily. Maybe slightly in the guidance of profitability, but this was a fantastic quarter in terms of that. I just don't see the issue. Let's look at the balance sheet here, as we always do, looking at a 9 months comparison. Total current assets at $61.3 billion compared to $47.2. Nice growth there. Cash position grew. Short-term investments grew. Trading assets grew. It all grew. So it's nice to see on that aspect. Total assets in general at 167 to 153. Good growth there. And again, that was mostly because the current assets position. Total current liabilities at $29.5 billion compared to $25.7. Nothing crazy there at all. Total stockholder equity rose by a decent amount, $90 billion compared to $81 billion. So $9 billion of growth on that balance sheet. I like it a lot. And again, this is a stock that's, in my opinion, trading relatively cheap. You look overall, it's a company that's going to, last year revenue $77 billion and is trading at a market cap of only $227 billion. And this year, likely, based off the numbers we've seen, it's going to be posting probably around an $85 billion number. Maybe not. Maybe it's closer to 82, but still, I think it's pretty nice. When you're talking about not even trading 3 times that amount and a P ratio of only 12, and after this quarter, that P ratio will probably fall a little bit under the 12. A little bit under the 12 number there. So I think Intel's it's a cheap trading stock, and it just hasn't really gotten a fair shake. And I think there's a lot of good core aspects of this business that could do well in the future. I don't know why it's trading at the valuation it is necessarily. It's because it's not a hyper-growth company. I get it. But I just think that should be trading definitely over the $60 mark, and trading at a $50 mark is darn cheap. I mean, we're talking about this thing being down massively. It's trading cheap. I hope you enjoy this one. You have a great day.